Good afternoon, everyone. 5:30 in the UK on Friday, the 11th of February. As you can see, the short-term trend of the VectorVest composite is up. The underlying trend is down, but the market not in great shape this afternoon after that CPI figure yesterday. Inflation running in the US higher than it's been for the last 40 years. That's a long time. SPX is down at 4492. We'll look at the chart momentarily. So if I have a look now at the chart of the VectorVest composite, and that's the VectorVest composite of the US, these are the medium-term signals that I've been following, the DEW signal. And although we've actually closed above the moving average, which defines the methodology, the momentum still hasn't come up above zero. It's getting there. I thought maybe we were going to, in fact, have a signal yesterday or today. It didn't happen after that sell-off yesterday. So we've closed above that high. That's a good sign, but still too early to do anything. If you're following a rules-based system, many of you will be trading a more discretionary system, but if you're following a rules-based system, then for me anyway, I'm going to sit up and wait and keep my powder dry. If we have a look at the SPX, that's the top 500 companies in America by market cap. That's the sell-off yesterday, that's a big day after the CPI number. Now, this is a pattern that I've traded a lot. If you have 2 up days and it closes in the top 80% of the range, then selling that day's low is invariably a good trade. I call it a surprise attack. In other words, it's heading up here, everything is good, closes high in the range, and then the next day it breaks that low. It has to break the low on the next day. And I've traded this a lot over the years. That was a beauty there, you see, going up, and then all of a sudden some news came out and falls back. There are half a dozen patterns like this that I've traded over the years. Now, I traded this one yesterday, and I was hoping I was going to get a nice 2 to 3 day trade. But the one thing about this pattern that I've noted is that it really must fall very fast. Now, just looking at that chart, you would think it did fall very fast, but it didn't. It actually opened, and then after the CPI number, it went down, pulled me short, and then ran right up again and stopped me out. I had a tight stop on it. These surprise attacks need to work straight out of the block or I get out of them. So I lost 20 points in that. And then I went back in as it went through the low again, and I made it back. I'll leave it up to your own thoughts as to whether I got in for all the right reasons. Did I get in because I was following a set of rules, or did I get in because I want to get my money back? You saw it. I'll allow you to work that out for yourself. So if we have a look at this a little bit more clearly now on the 24-hour market. That's the 24-hour market. It's a gnarly chart. I was long of this and got out of that, I think, on Wednesday. Rarely do I hold them overnight, but that 4-hour print here, that on the 4-hour chart, that's a beautiful outside bar as well. So I held that into the, I think, the close on Wednesday. And then all of a sudden, all hell broke loose after the CPI number. And as you can see, it came right down. That's where it pulled me out, pulled me in. And then as it went back up again, it stopped me out. Big deal. And I managed to get a little bit of a short in here to make my 20 points back. Today, well, I had a bearish disposition because I felt that even under the most bullish circumstances, it needed to go down to these lows, we shall see. I also felt it in terms of this wave down. That's 1, that's 2, that's 3. And we've got a little ABC for 4. And as you can see, it stopped at that low. So I'm currently short, and I'm short from 4500, 1 tick above it. And we'll see. If it gets down towards these lows, I shall certainly be taking money off the table down around here. I'm certainly not going to hold it over the weekend, although market does look quite bearish. I thought that we were going to break. If we go back to this daily view, I was hoping we were going to break that 4600 level, as I tried to explain the other day as best I could, but that certainly didn't happen. So if we do take out this low, I don't think that's going to happen today. Anything can happen, but if we do take out this low, then we're probably going to go much lower here. So in terms of stocks, nothing to do if you're following a VectorVest rules-based approach. Yesterday afternoon, as the market was rallying here after the CPI number, I was so close to buying into a position on Ford. I'll show you the chart now. I've got these in here, folks, just to make it easy for me to find them. The only position I've got is on CF Industries. But Ford really appealed to me yesterday because, and I've had quite a few good trades in Ford along the way. That was the last one. It was a beauty. And that was a beauty as well. And a terrible behavioral finance problem in that if a share's been good to me in the past, I tend to favour it again. I know that's rubbish, but that's just me. I felt that this was a falling wedge. And if we blow it up to a 3-month chart, we can see that as the market rallied yesterday afternoon after the CPI number, at one stage, that was a beautiful bullish bar. I was so close to buying into it there. I'm glad I didn't. As you can see, a gap down and a gap up. That's what chartists refer to as an island reversal. I can put on a stochastic. The stochastic is showing good divergence. And I think I'm watching this, folks, because if the DEW does turn up and this market feels that we can handle these interest rate hikes, or the market feels that the Fed won't have the bottle to go ahead with these interest rate hikes, then I think that based on this pattern, look at the VectorVest earnings per share was just upgraded here, and you can see there's the VectorVest valuation up at 24, which is back to those old highs. So that looks good, and that's on my radar for next week. Zim's also on the radar, and Nvidia I've been looking at as well, but Ford really appeals to me for a swing trade if and when the DEW prints a buy signal. Okay, so if we go to the UK, well, UK short-term trend is up, all underlying trends are down. Let's look at the market timing chart. And there we are, a very similar situation to the US. But if we look now at the DEW, we can see that it still hasn't fired. I would like it, as I've said 1,000 times on here, to close above that high as well. And as you can see, the intraday high yesterday was in fact exactly there. So traders took profits at that level. We're moving up nicely here, but still too early. One share that really has jumped out at me is a share that I've known. I used to work for them. I resigned in 1988, and I have a lot of their shares. Some of them were given to me from that period. Those shares are not listed in London. They're listed in Johannesburg. This is Anglo American. And commodities have been good. Commodities look strong, and copper had a very good day, among others. As you can see, it's undervalued. it was up well yesterday. I think it pulled back a bit today. The relative value in VectorVest, the upside in relation to AAA rated corporate bond, is excellent. Relative safety is poor. Just remember a few years back it nearly went bankrupt. It was during the commodity slump, and that's normal for a commodity stock. Short-term trend is excellent, and the longer-term trend, because of that sell-off, is also not great. Earnings per share should grow at 33% next year. So it's cheap. It's on a PE of 9 going forward, and the growth to PE, some people use that the other way around, the PEG ratio, but the growth to PE is 3, an excellent number. If we look at this chart and put on my normal notation, there's earnings per share, and looking back a little bit makes it look prettier, I think. There's earnings per share. It's risen, doubled in a year and 10 months. But the valuation is up here somewhere. But the thing that really appeals to me as a technician and as a chartist who loves charts, first of all, my 3 moving averages are pointing up, and but I can see a really good cup and handle pattern, and even more, I can see an inverted head and shoulders pattern. And if that's the case, ladies and gentlemen, the target would be, David, the target would be this bit, 25 to 35. That's a £10 target in this. Clearly, it'll be a function of the commodity prices. And I've already got my biggest position is in BlackRock World Minerals, of which this is a constituent. But nevertheless, that looks quite compelling for a fairly fast run. And on Monday afternoon, I'll be looking at watch lists for both the US market, spread bets for me, and the UK market, which are position trades for me at the VectorVest Q&A session. So anybody that doesn't have a link for that, if you email me, david.paul@vectorvest.com, I'll send you one with the greatest of pleasure. Folks, have a great weekend. Let's look at the American market once more. And nothing much has changed. The S&P is off 17 ticks on the day, and there we're sitting here, and I have a position that I'm going to get rid of and go to the gym. Have fun, everyone. Bye-bye.